Hello, everyone, and welcome to the Texas Mortgage Bankers Association's Education Webinar Series, part of the Education and Endowment Committee led this year by co-chairs Hannah Barton and Stephen Bertrand. I'm Stephen Bertrand, and I'll be helping facilitate today's webinar titled Reconsideration of Value, Navigating the New FHFA and HUD Policies for Compliant Success. We'd love to hear from you during our webinar today. Please feel free to ask questions throughout the webinar using the Teams Q&A. Now I'd like to introduce today's moderator, Alex Massa. Alex serves as Division President for Appraisal MC and Division President for the Valuation Department. As Division President, he is responsible for setting, maintaining, and implementing compliance objectives for the company. He ensures that Appraisal MC maintains efficient processes for delivering credibly supportive valuation products that conform to client and investor requirements, as well as federal regulations. In 2002, Alex founded one of the largest appraisal firms in the country prior to joining Appraisal MC. Alex graduated from the entrepreneurship program from the University of Houston's Business School and has worked in the appraisal industry since 1998. Okay, let's get started. Alex, the presentation is all yours.
Thank you, Stephen, and thank you to the TMBA. I'd like to quickly introduce our speakers. First, we've got Christy Harris, who's the Executive Vice President of National Operations with Prime Lending. Hi, Christy, how are you?
I'm fantastic. How are you?
We're doing great. We appreciate you being here.
Me.
We're looking forward to hearing from you on the operations side. Next, we've got Tom King. He is an attorney with Robertson and Schutz Vetters LLC. Tom, welcome.
Thank you. Glad to be here.
We're looking forward to your wise counsel on this topic. And then we've got David Ray. He's the owner of Gardner Ray LLC, an SRA designated appraiser. Congrats on that designation, David. We're looking forward to your perspective, and thanks for joining us.
I appreciate it. Thanks, Alex. Good morning, everyone.
All right, let's jump into it. So today we're going to hit as many topics as possible and open up this first question. This might be directed more to Tom, but I'll let anyone on the panel chime in. But the question is, can you provide an overview of the key changes in the new FHFA and HUD ROV policies and why these changes were implemented?
Sure, I'd be happy to. And let's take the last piece first, the why. Prior to this, the formalization of this program, of the various investors out there at the federal level, only the VA had established a reconsideration of value program, and that's been in effect for a number of years. But this is a first for Fannie Mae, Freddie Mac, and the FHA program. The why is that up until now, there has not been a formal pathway for borrowers to challenge an appraisal that has been received. And through various community groups applying pressure and so on, the administration asked the various agencies to come up with this type of a program that would formalize and set forth processes that are common across the industry to allow borrowers to challenge appraisals when they come in. So this is that program. It was originally published back in May. There was supposed to be a mandatory compliance date a little over 60 days ago, but that was extended to October 31st. So for GSE loans, Fannie Freddie loans, any loan that has an application date on or after October 31st has to have provided the disclosures, and if a consumer, if the borrower challenged an appraisal through the process, the reconsideration request would go through the process. And with the FHA, It's any loan where a case number was assigned on or after October 31st. Believe it or not, the GSEs, Fannie and Freddie, along with the folks from HUD, worked closely together. And if you read their announcements, they're fairly identical. There's a little more detail in the FHA's announcement, but I think that's to be expected. But very, very similar in scope, language, and so on. So the reality is that unless a loan is going to be held in a portfolio, almost all loans that are made these days are going to have to comply with the reconsideration of value requirements. The intention of the rule and the disclosures that have to go out now is to make borrowers knowledgeable of their ability to challenge appraisals and make it clear to the consumers what they need to do to be able to successfully challenge an appraisal. Now, that doesn't mean that once an appraisal is challenged, that the value opinion contained in the appraisal will change at all. It merely means that the consumer has the right to challenge and that all of the concerns they bring up in their request for reconsideration have to be addressed in the appraisal. That's the overarching framework for what we now have. But under this, and I can't really speak to, I'm sure David will, how the appraisers are implementing all this. But as far as lenders go that are going to originate loans that will ultimately be delivered to Fannie or Freddie, or that will be insured by the FHA, there are certain expectations that have to be met. And at a high level, what that means is that all of these lenders have to have established by now a policy, a written policy on how they're going to implement the reconsideration of value program. They have to have processes in place that will ensure that all the requirements that the agencies have set out are complied with. They have to have disclosures in place. And one of the first questions I got when this all came out was, well, are there going to be standardized policies, processes, and disclosures that are made available for all the lenders to comply with? And I think initially there was an intention on the part of the agencies to do just that, come out with standardized policies, processes, disclosures, and so on. But the closer they got to implementation, they all decided we really can't do that because every lender is going to have its own standalone program. And the policy that they write, the procedures, and the disclosure have to all reflect each other. So it would be hard for a standardized set of documents to be implemented. To the best of my knowledge, I know of one vendor that has something standardized out there. I believe it's Stock Magic. I don't think otherwise there's a lot. So by now, all of the lenders should have in place their policy, processes, and disclosures that they have been giving since October 31st. And the policies are easy. In many cases, a policy is going to be fairly short and straightforward. We're going to comply and we'll do it according to our processes. The processes, procedures, have to be fueled with a lot more detail. And anybody who writes procedures knows how difficult that can be. But a lot of it has to do with how they're going to make sure they've given disclosures, that their disclosures are easy to read and understand on the part of the consumer, that there's a process for logging in requests for valuations. There's a process for tracking those, make sure that the internal folks at the lender, whether it's the underwriter or an appraisal expert, have reviewed the request to make sure that it is complete before it goes on to the appraiser. They've got to have a process for underwriting the appraisal itself, which has to happen before any challenge moves on to the appraiser. They have to have guidelines on and standardized communications for how they're going to engage with the appraiser, because we still have the air rules out there that have to be complied with. We can't be seen as a lender trying to impact the outcome of an appraisal, but yet we have to communicate with them. So there have to be processes around that. And wherever there are processes, there have to be controls in place. I'm sure controls isn't a new word to anybody, but compliance people are going to need to monitor all of this to make sure that the standards are being complied with, the agency standards and so on. That's one part, making sure the processes are in place. Next is the disclosure itself. And there are certain requirements set out by each of the agencies. Starts out with generalized information about the individual making the challenge, about the appraisal, and not demographic information, but address, names, account numbers, that type of thing. But then you have to include in the disclosure instructions for how the challenge takes place, what information they need, and it has to be such that the average consumer is going to be able to readily understand what's being said. So the disclosure itself has to be given twice during the process, has to be given upfront at the time of application. And you say, well, when is application? You use the TRID rule to determine when the application is, when you have the 6 bits of information. So the disclosure has to go out then, and it has to go out when the written appraisal goes out to the consumer. The disclosure has to accompany it. So it goes out twice, and you have to have evidence in your file of how it got to the consumer. Now, do the disclosures have to be signed? There is no signature requirement at all, but the lender has to evidence in his file somehow that the disclosure was given and what that disclosure was. Some will say that getting signatures on the disclosures is the easiest way of accomplishing that, and it probably is. But aside from that, if you have evidence otherwise that it was sent to the customer, not that they necessarily received it, that should be ample. Of course, investors are going to have their own overlays about what is required when it comes to that. So that's a disclosure piece. Now, beyond that, there's the actual operation of the program. There's a lot to that, and I'm sure the other panelists will be able to speak to that. But that's the overarching framework for it all at a high level, and be happy to answer questions when they come about.
Tom, thank you for the overview. I think it's very important to understand the why when we're dealing with situations like this. But then I'm going to jump into one of Christy's strengths, which is operations. which I know Tom briefly chatted about, but the question more directed to you, Christy, is this. How will these new ROV policies impact the daily operations of lenders and appraisers, particularly regarding communication and documentation requirements? I know Tom did touch on this. Is there anything that you would like to explain or add to that?
Sure. So a couple of things. One, for sure, I think it's smart to have the borrower sign that disclosure, even though there's not a requirement. When you have a signature, it helps alleviate any question and having to prove something up. Most of us all use some kind of DocuSign solution anyway, so I think having that signature on there is super important. At Prime, we kind of had our own quasi reconsideration of value before it was actually implemented as a rule. And so we had some processes in place around that already. And so what we laughed about is actually having to have those processes, procedures, policies documented, because I think both HUD and the agencies want to see those items in a detail and documented, and also part of your QC plan. And so those are things as a lender to make sure we have. At Prime, we actually do run our own appraisal desk. So I felt very fortunate with that, not dealing with an AMC when I'm having to do a reconsideration of value. So that's all managed. Those requests will come into our appraisal desk. That's what the disclosures will tell our consumer to, make that request to our appraisal desk with all of the detailed information on how to handle it. And our appraisal desk will, of course, facilitate that with the appraiser that we need additional information from, right? Or that reconsideration of value. So, how it would impact a lender that might not have their own appraisal desk, it is having a centralized place to keep records, to keep that communication. Because again, because of error, your branch can't just call, or your loan officer can't just call that appraiser. And I think it's going to be very important too, that we're able to quickly identify if we had a transaction that had a borrower requested ROV, and be able to report that to the agencies when they do come in for audit. Is that, because we as a lender still have the, ability to request an ROV ourselves, but we would need to be able to, identify it quickly if the consumer requested that ROV. It's more documentation, a lot of CYA, and making sure you can identify those, keep the records, make sure you have both disclosures. There's one, like Tom said in the beginning, as soon as you trigger TRID, within those 3 days, you need to make sure that first initial disclosure goes out. And then one of the things we did is incorporate it into our appraisal receipt form. And so, making sure you have two, it's not just one, that's going to be important. I will go on to say that, what are we, 21 or 22 days into it, and we haven't received any. So I don't know that it's going to be a mad rush for all of us to have, tens and 20s of them a month. So I'm hopeful that it doesn't have a huge impact on timing or impact, a borrower's closing.
Christy, thanks for your insight from the operations perspective. I'm going to gear this next question to you, David. David, what's the appraiser's obligation when responding to these ROV requests?
So from an appraisal standpoint, we're going to get that information that comes from the lender, and we're going to start digging into what they're asking. Like they're going to send us a list, whether that's comparables that they want us to consider, whether they need us to address something else in the report that the borrower might have said, hey, we have this, but it's not in the report, whatever those questions may be. And so we already do this on a daily aspect at our company where we're already taking this stuff into consideration up front. We like to ask as many questions as we can and get the most information we can gather up front, whether that's from the lender, from the borrowers, listing agents, whoever it may be, the builder. And so the more information we can gather up front and get about the property, then when you do get an ROV that might possibly come back to you, you already have all that stuff written down and you've got documentation of that, and you can go back to your notes and look at it and kind of compare that to it, and then you address it in the report. We go and we talk about, hey, okay, yes, we're humans. There's going to be some times where you might make a mistake and change something, and that just isn't right. You say, yes, that was wrong. Here's the correction. I made it. And then you made a note to the underwriter about that, and you write about that and say, hey, I corrected this in a report. When it comes to the comparables that are sent over to you, we're going to pull them up. We're going to look at them, and we're going to, we might have already considered those comps as well in the initial process of doing our appraisal. And if that's the case, then we can go back pretty easily and just say, hey, we didn't use this comparable because of this, and we have that information. If there's one or two comps that we get that wasn't involved or we didn't know about this, then we need to dig and figure out what it is and if it's a reliable comp to use. And we would print it out separately and kind of adjust that to see kind of where we're at and see if it's something that is worth the consideration, or if not, and then we would put that in the report as well, and also talk about that. To the note to the underwriter section is one section we have in there that kind of goes directly back to the lenders and for those underwriters to look at when they send that process over for us to consider that ROV.
Great answer, David. I'll share from my perspective on the AMC side. Whenever we get an ROV response back, we want to make sure that the appraiser addressed all the issues brought up by the borrower. And if not, we will ask the appraiser to comment on those. We did have one recently where they did not explain why the sales were not utilized specifically. So we went back and asked. So I'm glad you're following that protocol. I have a question here. Christy, I think I'm going to throw this one back to you, and Tom, maybe you can answer this as well. What if you get a borrower ROV request and it's not compliant with heirs? What do you do? Do you go back to the borrower? Do you clean it up yourself at the appraisal desk? What process do you have?
No, that it would be kind of us, before we ever submit an ROV, whether it's, now from a borrower or from a branch, right? So if I have a loan officer requesting a reconsideration of value today based on their conversations with the borrower or whatever, that's something that goes through our appraisal team, our appraisal desk. And we do, there's plenty of times we do cleanup before we want to send it back out to the appraiser for them to see it, So, that is something that you'll have to be careful of, and coming directly from the borrower, consumer, or whatever, that is, something you would need to communicate on what we can and can't say and do when we're getting that appraiser to reconsider some information, to reconsider that value. The other thing too is details, right? The devil's in the details, and that we can't just send, I think my house is worth, $250. We're going to have to provide, what the details behind what we think, no different than we do as a lender. We would have to work with that borrower to be able to provide the details to be able to give to that appraiser. So
yeah, great
really
answer.
The devil's in the details, right?
It really is. Yeah, we do a little bit of that cleanup work on the AMC side as well. So we're there as backup to the backup.
Absolutely.
Tom, thanks for that answer, Christy. Tom, I've got this question for you because you brought this up in your initial response to the first question. What are the most significant differences between the GSE and FHA ROV requirements?
That's an easy one. Under the GSE requirements, the responsibility within a lender's shop to make sure that the ROV requests make sense, comply with the rules, are really valid, that falls to whoever the lender designates. It could be an appraisal expert, it could be an underwriter. That's up to the lender. On the FHA side, though, it's specific. At the end of the day, the DE underwriter bears that responsibility. They can delegate, but it's their signature at the end of the day. They're the ones on the hook. So who's responsible is really the biggest difference that I see. I don't know, Christy and David might not agree, but in my eyes,
agree
that's
100%.
it.
Yeah, the process, the document, you know, the disclosure piece, all of that, making sure you have your policy, procedures, processes documented. I can't stress that enough. They come into your shop, they're going to want to see them. And it's not going to be just something to talk through. They're going to want to see it in writing. What did you do to communicate it with your staff and your team? So they're going to want to see that it's been talked about, meeting notes, whatever, emails, or however you communicate on the lender side. But that's the biggest thing is, you know, the DE on FHA, the DE underwriter is putting their DE on that collateral. And so it will fall back. You know, it can be a collaboration between your DE underwriter and the, you know, whether it's the AMC or your appraisal desk or however you work it.
Thank you both for chiming in there. This next question could be answered by all of you, and all of you may have a different perspective on this. But how do these policies address concerns about bias and discrimination in property appraisals? And what can lenders take to further mitigate these risks? I'll add this. Is there any technology out there that appraisers are using to mitigate any bias risk? I'll open this up to whoever would like to answer.
I think one big item is lenders have to make sure that all of their mortgage folks, particularly consumer-facing mortgage folks, but all of their underwriters, processors, and so on are thoroughly trained on fair lending issues and discrimination. They have to be able to recognize it. And I think the other big thing is, and this is probably more so in the past 4 or 5 years, it used to be that an underwriter pretty much looked at credit. And I think in a lot of shops, particularly those with smaller lenders, the underwriters tend to focus on credit. Yeah, they'll look at the appraisal, they'll look at the value, but they don't, at least historically, haven't had to go into the nitty gritty nuts and bolts of the appraisal and truly underwrite the appraisal. At larger shops, like I'm sure at Prime, that's probably been the case for a number of years. But anymore, appraisals have to be thoroughly underwritten in the lender shop. And that means people have to be trained to be able to do that. So training, I think, is a huge part of it these days.
Yes, for sure. At Prime, we do. For as far back as I can remember, our underwriters have been responsible for the credit piece and the collateral piece. So when we do credit training because of changes or whatever, we're doing appraisal training as well. Like I said, back when I underwrote 1,000,000 years ago, I was responsible for it too. So, you know, I think there are certain softwares out there, and I think David, me and you were talking about this earlier. There is software appraisers use. There's software that some lenders use, right? They can pick out the words. One of the things we were talking about earlier too is the English language is funny because a word can mean 14 different things, and so sometimes it does get a little frustrating because a specific word is not biased or discriminatory, but it's the meaning behind it and how the text in which you use it. So that can create uncertainty.
Absolutely. Yeah, with that, I'd love to get David's perspective on that because I know we did touch on that. Thank you, Christy, for that answer.
Talking about that earlier, and I really think communication documentation is huge in this aspect of it. when we were talking earlier, we were talking about that, how the English language has all these words and everything. And there are things in our softwares that help us validate our reports and everything before we send these out for potential bias, hot words, whatever you want to call them. And as long as you're backing that up in your storytelling of your appraisal and how you're using that word, then you're not going to have any issues on the back end of it when it gets to the lender and they upload it to the portal to whoever they send it to. We're going to write the report the exact same way for every type of appraisal that's going to go out. It just might go to different types of Fannie or Freddie, and different ones require different requirements for reporting and appraising and what you're looking at. But communication is number one. The biggest thing I think is if you can get all your information and you're well versed of what that subject property is, and you're getting communication from the lender, you're getting communication from that borrower. You don't normally talk to a borrower in a sales situation, so you want to be talking to the listing agent about that property, and just trying to gather as much information as you can up front to be able to, when you're writing a report and you've got your comps chosen and you send in that report, that you have everything covered and it's all well documented and supported. So when it does get back to the lender and there's a possible ROV on that, then it goes through their system of their underwriters. And a lot of times it doesn't make it back to us because we've already given all that information and we've had all that information up front. It's when you're not getting that information about a property and you're just going off of what you see all the time is where you could run into a lot of ROV possibilities for you or your employer to come back to, because you weren't getting enough information and communicating well enough on the upfront part of that appraisal process.
David, thank you for that perspective. Christy, I'm going to throw another question your way. And you did mention that you're not dealing with many of these ROVs currently, so they timed the release of this pretty well for us to get used to it. But
Right.
there will be a time where these ROVs might come in floods, in tidal waves rather. How will these ROV policies affect loan processing timelines, and what steps can institutions take to prevent delays?
Well, that's a tough one, right?
Right.
So, because each one's so different and unique, I can tell you, I'm going to give y'all my opinion. So I don't think we'll see a bunch of ROVs on purchases, right? So you typically don't run in most of the time to issues much on a purchase. But when we get back into, and we will, rates are going to come down, y'all. I know it. I just know it. That, we will get back into, positions for refinances. And I think that's when maybe we'll start to see that increase, because, we all think our house, when we're trying to do a refi, is worth more than, what the appraiser and the lender think it is. So I think you might run into some issues there. But, it's really going to be hard to tell how it's going to impact, because each one's going to be so individual, it's individual and unique. And so, as long as, we can put together the necessary information for our appraisers up front to get, accurate, detailed information to get to that appraiser, hopefully, they'll be able to turn that quickly to get that back to us. So you're not seeing huge delays. I think, Tom, you mentioned this earlier. It's not a guarantee, right, that it's going to increase the value. It's, most of the time, it's about getting additional commentary from the appraiser. So, it's hard to tell if it's going to have some huge delay in a process yet. Because like I said, every situation is going to be very individual and unique. So I don't know how to predict what it might do on the processing timeline.
Yeah, and it could be periods where there is a backlog. So we need to be ready for that.
An interesting tidbit here to throw in. Christy just mentioned that there's no guarantee that the value is going to go up. There's also no guarantee that the value won't go down. And if the
Right.
value
Yeah,
goes
that's very
down,
true. Yeah.
if it goes down as a result of the ROV process, the lender has to stick with a lower appraisal. So
Yep.
there is a danger to that.
That's a great point.
Yes,
Great.
sir.
I'll move on to this next question. And Tom, in our communication, you brought this question up. I mean, I'm very interested to hear your response, and I might have follow-up questions to this. Can a broker deliver the initial ROV disclosure?
Well, there's no prohibition against a third-party originator, a broker, delivering the disclosure, but there could be some complicating factors. First, the lender is ultimately responsible that those disclosures go out and that they comply. So there's a risk right there. What if the broker's disclosure doesn't comply and the lender is relying on it? Secondly, the broker's disclosure has got to mesh with whatever the policies and procedures are of the lender. How are you going to make sure that's the case? So while there is no prohibition against a broker giving the upfront disclosure, big risk for the lender, and the lender is going to want to manage that risk.
Here's a question. When it's a broker delivered ROV, who's vetting this? What if a broker doesn't have an underwriter or an appraisal matter expert to vet this, to push this through to the appraiser? What's the process there?
Yeah, I can't, I don't know. Like, I don't, if, I was a wholesaler and allowing people brokering, loans into me, at least for a long while, I'm not sure that I would let any part of this process be done at the broker shop, because again, not many of the wholesalers that we deal with here at Prime even let us disclose the LE, right? They disclose the LE because they don't want to be bound by what I'm saying. So I think most of the time, the wholesale company that you're brokering into, they're going to want to handle that process instead of letting the broker do it. But because I don't have wholesale business like that comes into Prime, I'm not really sure how they'll be handling it, but I know what I would do if it were me. I would handle it.
Great question. Great answer. That's still yet to be determined. We'll probably get
Yes.
more questions on that down the road. My next question is, can a borrower request an ROV after a lender denies an application based on the appraisal?
And the answer is yes. The only stipulation is you cannot accept an ROV request after the loan has closed. But if the loan has been denied because of the appraisal, it has to be based on the appraisal, then yes, the borrower can request an ROV. The lender has to cooperate. The lender has to make sure the request, it meets all the requirements, is clear, and so on. Work with the borrower to remediate it if necessary, and then pass it on to the appraiser, even if that loan's already been denied.
Great. Thank you for that answer. I've got another question here, and this one's a little bit more off the cuff. What's the ROV policy if it's not a GSE or an FHA loan? What if it's a portfolio loan? Are companies adopting a universal ROV process, or do you have different processes for that?
To speak to that again, I would be guessing. I mean, one would think that because this is coming down, it's coming down from the FHFA. However, appraisal bias and discrimination concerns have been raised by many of the other regulators that, as a lender, prudent lender, you would, as a portfolio lender, you would want to have some kind of, policy and procedures in place so a borrower could do it. I mean, that's just not a mandate from the FHFA, for the agencies. the other thing, just a little plug that's not an answer to that, that it was very helpful to me is if, as a lender and even as the appraisers or whatever, HUD has an FAQ out there on their webs, on HUD.gov, I believe. That's an FAQ. It was done at the beginning of October. I think it's very beneficial. So if y'all haven't pulled that down, I would recommend that y'all do that because it's got FAQs and it is helpful. So.
And let me mention that back, let's see, let me find a date here. I don't see it right off, but the banking agencies did issue guidance on reconsiderations of value. It's more bent toward a lender's request for an ROV, but it does mention consumer requests for ROVs. So if you're a portfolio lender and you think you have no responsibility, if I were you, I'd get a hold of the interagency guidance on ROVs because it's out there.
Great. Thanks for pointing us in the right direction, Christy and Tom. This next question, and I'm sure more challenges will unfold as time goes on, but what challenges do you foresee with implementing these new ROV regulations, and how can institutions proactively prepare to overcome them? I'll open that to any of the speakers.
Yeah, I think maybe people are going to say I'm repeating myself. So it just really to make sure your policies, procedures are documented, make sure that you have the disclosures in place. Don't forget there's two. If you didn't hear me before. And then again, we are still way early in the implementation. And because everybody's unique and individual, things are going to come up that you just can't be prepared for yet. I think, we're a ways, as I said earlier, I think you're going to start to see more requests come in when we get back into a refi market than in a purchase market. Y'all might all tell me later, 6 months from now, I was wrong and it's been a disaster for you on the purchase side. But I really personally think it's going to be more of an issue on the refi side than the purchase. And that it is going to be, one of those things, the first few we're going to have to walk through and learn as we go. But, if there could be, 15 goes smooth as glass, and then you're going to have one just like every other thing in this crazy business that's going to be a disaster. So I don't know how to articulate yet what could happen, because who knows how things go. But getting my biggest thing right now is we made sure our disclosures were in place, our policies, procedures were well documented. We had it in writing in our QC plans, and so that way we can show anybody that wants to come take a look that we have educated. We had training, we had specialized training for the underwriters to make sure that they all understood what all of this was all about, and have additional training for your sales team so they all understand it as well.
The other thing I would say is it would be easy for a lender, particularly a lender in a small shop without a lot of staff, to take the position that if an ROV request were to come in, they're just going to pass it along to the appraiser. That's just not the case. While the FHA guidance is more specific on this than the GSE guidance, they all make clear that the lender has the responsibility of, I hate to use the word, but underwriting the request, if you will, reviewing it carefully to make sure that it can move on to the appraiser and make sense. If there are any deficiencies in that ROV request, it's on the lender's shoulder to work proactively to, and they use the term remediate that request and get it ready to go to the appraiser. So it does make sense. So the appraiser can do something with it. You can't just turn a blind eye to it and pass it along. You got to review it, make sure it's right, and work with the consumer to make it right at the end of the day.
Along the challenges, David, I'm going to speak to you, appraiser to appraiser here. We know very well that eventually we're going to get a second ROV request from a borrower. What would you say your policy would be on a situation like that?
On
I think it's
getting, go ahead, Christy.
Where a lender maybe is not following guidelines, or you're getting a second ROV from the borrower.
Oh, okay. Okay. We go right back to the lender. I mean, we've only dealt with one or two in our office since this started. And like Christy said, you can have a bunch of them that go very smoothly, and then you get one that just drags through the mud for days, and that's what we work and live in, right? But if we get something like, I think one of the ones we got, just for an example, they just sent us 2 addresses, and that's all they sent. And they were like, "Can you look at this?" And that's the way you always be. Appraisers have always done reconsideration of values whenever it's deemed necessary. It's just never come from the consumer or the borrower. It's always come from collateral underwriting or the lender, or whoever it is that, why didn't you use these 4 cells or whatnot? But I think in the ROV part of it, sometimes, and as long as the lenders have these in place, which like Christy does, and it's vetted properly, then we're not just getting 2 addresses. We're getting, hey, please look at these. The borrower sent these 2 addresses. They're on the same street. And, and this is why, don't just send an appraiser 2 addresses and, then we're there. We've got to look it all up. We're going to look it up anyways, but then we're looking up and then we're trying to think, why did they send these to us? Because it could be higher, it could be lower, or it could be the exact same thing. And having those processes in place too, from the lender side would help, because sometimes when we've had ROVs, and they send us 4 or 5, comps, and it's usually from the listing agent or whoever it is. And 2 or 3 of those are already in our report, and because they didn't look.
Happens all the time, right, David? Yeah.
You're like, okay, well, this one, and this one were already in your report. We didn't use these 2 because of this and because of that. That's never going to change how we've always done it. We're always going to talk about them, and then we send it back. But knowing up front, like Christy says, it's just like the broken record, communication, documentation. The more we can have up front, the less chance of an ROV coming on the back end of it.
That's great.
The other thing I'd say is, if a lender gets a repeat request from a consumer, the lender should just end it, because there can't be more than one ROV request per appraisal. The lender never should send the second request on to the appraiser.
Oh, it's our responsibility to nip that before it ever goes to the appraiser.
Correct. Christy, you assume everyone's going to follow the rules and knows the rules, which is why we're presenting today. We're getting really close to the end of our time here. I do want to reiterate what Stephen said in the beginning. If you do have questions you'd like for the panel to answer, if you could please throw them in the Q&A section. And any final thoughts from speakers before Stephen jumps on here and asks us any questions that may have been brought up?
No, just what I keep saying is a broken record. Make sure y'all have it documented. The lenders, make sure, you have it, your process is documented, because you're going to be asked for them. And because, it's anytime there's a new hot topic, what do they pick at? Well, they're going to pick at this. So
that's true. Chrissy, I'll reiterate, all communication needs to be documented as well. So if you are using an AMC, which is what we are, we do document that for the lender. And I know you probably do it internally, so make sure you've got that.
Okay.
Tom and David, any final thoughts?
Just like I've always been saying too, as long as we have an open communication and a dialogue between the lender and the appraiser, when something like this comes up, it's going to benefit both parties. And one of the questions you had asked earlier about, the timing of this, how that can affect, the full loan of trying to go through an ROV process. I mean, we try to get something back to you within a day at the latest. If we can get it done sooner, we will. But if, like I said in my example, if you only give me 2 addresses and no commentary or no explanation, then that's going to be more on what I need to do than if you say, hey, this is from the borrower. He knew this house was similarly built out like he is, whatever it is, if they can get some kind of, it's just the communication. And like through Christy, like we don't directly talk to Christy, we talk to her appraisal department. So that communication between appraisal departments and appraisers back to lenders needs to just be an open dialogue and easily, being able to speak and communicate with each other, because if we're all on the same team, and if we can all move seamlessly through that process, then it'll speed up, and I think it'll mitigate some of the ROVs as well too.
Yeah,
And
one final thing we didn't get into, and that is if there are what I would call negative outcomes, you go through the ROV process, and the appraisal comes back unchanged, and the lender thinks that there is perhaps discrimination or bias that resulted in that value. And I know this won't happen often, but if it happens to, the lender has an obligation to report that to whether it's state, federal, whatever, appraisal regulatory authority, so they can look into it. I don't expect that's going to happen often, but there is that chance, and the guidance from both the GSEs and the FHA make that clear. So that's hanging over all of this at the end of the day.
very clear.
Thank you for that. You're right, Tom. We did not have that in our group of questions. What happens when the results aren't positive? So, all right, let's. Stephen is back in here. Welcome back, Stephen.
Thank you, Alex. We do have a couple of questions from the attendees. The first one is going back to the ROV after declination. Is there a reasonable time frame or window to allow for this?
There's nothing specific in the guidance that came from any of the regulators on that. However, you do have to read into this some rational time limit. It can't be forever. It does need to be timely. But we can't put an exact time limit on it. I'd say just a reasonable amount of time.
Thank you, Tom. Any other thoughts on that one?
You can apply the silly rules that I apply. Like, I always like, okay, 120, 120 days, because that's how long an appraisal is good for. So I don't know that's a. I mean, I just think it's kind of reasonable or whatever. And some people might say it's too long, right? Could be 30 days or 60 days, but I just in my brain said 120 because that's how long an appraisal is good for, without a recertification of value, et cetera.
And that makes perfect sense. Great. Thank you, Christy. And one additional question from the attendees. What if the ROV documentation is sent to the DE underwriter and he determines there's not enough evidence or comps to send it to the appraiser? Is that acceptable?
Yes, it is. There can be an internal decision made at the lender shop that they're not going to send that ROV request on to the appraiser. If it has no substantive question in it, it does not need to be sent on, and the lender can resolve it right there.
Great. Thank you, Tom. Any other thoughts on that one?
Nailed it.
Right. Those are the only attendee questions at this time. Any final thoughts? Let's see here. It looks like we may have one more. For an appraisal transfer, does the lender releasing the appraisal need to let the new lender know if an ROV was done?
It's got to be in the lender's file and does need to travel on to the new lender. The FHA makes that clear in its rule.
Yes.
Okay, thank you.
And I would think there would be some commentary in the appraisal too. David, do y'all put in there anywhere that there was a borrower requested ROV?
We haven't, like I said, we've only dealt with one or two of these, so we
Sure.
don't necessarily say this was a borrower ROV requested. When we're talking in
Yeah.
our commentary down in the extended comments, when we're basically they'll be in the note to the underwriter section for our reports. Different appraisers put them in different spots, but we kind of highlight that, and then we have a section for that to kind of talk about different things, and that's where we'd go in. But we would have something in there. This is a revised report with the same signature date, and this is what was requested. And we'd probably list out those questions or whatever it was, and then we'd have those addressed in there as well. So it should be in the report.
Yeah, so one of the things that we're doing, like I said, we've had a reconsideration of value process. We called it rebuttal process, that our branches, et cetera, could do forever, right? And so that is one of the things that we're doing on a go forward basis, is in the system being able to identify, so you can easily report off of. Was it just a prime lending request to do the ROV, or was it a borrower request? And so I think, being able to easily point those out quickly for somebody that it was us that did it, or if it was the borrower, will be important.
Yep, and from like when we get that ROV request, just from my perspective of it, if the lender can tell us up front when that ROV comes over, is it a lender ROV request or is it a borrower ROV request? Because like I said, the one or two we've had so far, we were just given two addresses and that was it. And we had no idea where it came from or who was initiating it. And then we're having to ask more questions right away to try to figure out what exactly, who initiated it, why they wanted these looked at, and so forth and so on. And that could delay the timing that we had talked about as well too. So from our perspective, because then we've got to wait and it's a back and forth. If we have that information up front, then we don't have to worry about that.
Great. Thank you all. Those are the only attendee questions at this time. Any final thoughts from you all before we wrap up the webinar?
Sir, thanks for having us.
Yeah, thank you.
Appreciate it.
Yeah, thank you to the TMBA, the speakers. You did a great job. You fielded some very difficult questions. I'm glad I was on this side of the questions today. But I think you guys did a fantastic job sharing very valuable information and helping Texas mortgage bankers, mortgage brokers get better at our craft. So thank you for your time today.
Have a great day. Happy Thanksgiving.
Agreed. Thank you, Alex, Christy, David, and Tom for taking the time to share your knowledge and experience with us. Thank you all for joining today, and we hope you have learned more and enjoyed the presentation. TMBA continues to bring you great webinars like this one. Please visit the homepage at texasmba.org for upcoming webinars and previous webinar recordings. Thanks again, everyone, and that concludes our webinar.
Thank you.